Okay, I don't know if anybody can actually hear me right now. Okay. Mhm. All right, I think I'm live. I just got notification from my iPhone. I said, send out the links, please. Send out the links, guys. I I I plan to go get medication after this live session. All right. Let me share the link out. All that. Um, please, but comment on the Telegram if you can hear me, please. I don't want to do that mistake again. Okay, sharing them out. Comment on the Telegram if you can hear me so I can proceed, please. If you are not on the Telegram community, is going to be okay. I think I just got a comment that you can hear me. Oh, that's a go. All right. Sorry for yesterday, folks. My mic. I'm really, really, really down about. I don't know if I can do this. All right, so let's go. Okay, so yesterday we were talking about weekly market analysis. So we talked about dollar index. We talked about Euro USD. We were on GBP USD before my mic went off. Sorry about that. So I wish to continue from exactly where we stopped, so you don't get confused. And we never talked about Nasdaq. And the painful thing was that I was on going, and my phone was muted, so I did not hear the comments when people were saying they could not hear me anymore. But I'm here now to complete it. And luckily for those who are in the Telegram community, we'll see what we can do today with the free mentorship. That's if you're not there on Telegram community, like the I'm not spoon feeding, but just outlining things what I want to see on the markets, mainly on Nasdaq, right? Okay, so on GBP USD, I told some folks yesterday that I was expecting price to take out this outside liquidity. Price already swept buy side liquidity here, so this outside liquidity was my next target, and I wanted price trading into this fair value gap before dropping below. And you can see price Monday opens and price is already reaching for that fair value gap. And these previous days are perfectly respecting the consequent encroachment of the fair value gap. That's half of it. So later today we might, don't take my word for it, we might drop below this outside liquidity. So have this target, right? Okay, so that was that. I think I watched the live yesterday, and this was really where I stopped. So I was saying for the weekly arrays, I if price is to come down, that we really have all that targets to meet this volume imbalance and this other volume imbalance. And I went on to say that most of you might get confused with the imbalance stuffs and that. So I'm going to make sure our next topic will be mainly on that, where I'll point out these types of inefficiencies. So when you come across them, you don't get confused like that. So I'll do that. Okay, so expecting price to come to this draw liquidity. This volume imbalance act as magnets to price also, so it's a drawn liquidity for me. So I'm expecting price to come to it, right? Why some guys will be expecting bullish movements. You can see all of these zones are bullish and they are drawn liquidity. So price might or must surely retracing to where, to somewhere, to a draw liquidity. We have a volume imbalance here, we have another volume imbalance here. Price swept out this low on the weekly chart, and the daily chart you expect price to correspond with the weekly, right? That's what you want to do. You want the daily to correspond with the weekly. And now I said we had this sell side imbalance, buy side inefficiency. That's CB dropping this large FVG, which is also a draw liquidity for price. So price will might just trade into it, respect that, and later pull off for the rest of the week. That's what you should or might be expecting. Now on the weekly PDRA, you can see all this. You can see the daily volume imbalance. You can see how price perfectly respects that, and also this volume imbalance. Price perfectly respects that, but price is not respecting it on the weekly time frame. Understand that price is not respecting on the weekly time frame, so this can still act as draw on liquidity for future price action, right? Okay, so that's that. So let's go to Nasdaq. Okay, let me clean everything I drew here on Nasdaq. That was my daily expectations, but I'll clean it. Okay, so Nasdaq. I don't think this live will be too long. It's just like a continuation of yesterday. So I almost finished yesterday before the mic went off. Okay, so on Nasdaq, what should we be expecting? Well, we have let me draw my order block. Yeah, below there. So yeah, some of you might argue that's not another block or whatever, but that's my order block, so I don't really care what you think. So we have another block there before this buy side imbalance, sell side inefficiency. That's BC, and we have a perfect low here as liquidity, and we have this other FVG here again. So you can see different draw liquidity. That's the confluence you want to see. So this is strongly telling me that price is surely coming for this low here. You can see the momentum getting weaker, weaker, but this is telling me that price is surely coming for this low, and this is the daily time frame. Now what else do you see? I see another buy side I see another buy side liquidity there. Oh shit, forgive me. I'm trying to say something on my WhatsApp status today. It's not going. I don't know, maybe it's my network. Okay, so I see another buy side liquidity there. You can see beautiful equal highs, very beautiful, relatively equal. They are not perfectly equal, but they are relatively equal. And you can see this other low starting from here to this. All of these are relatively equal lows, right? And prices are magneted to all of these lows. So people might be looking for buys on Nasdaq, but that might be their own strategy. What I'm looking for is for Nasdaq to drop into this draw liquidity. You can see it came here for the first time, and Nasdaq liked doing this thing. Take this assignment, go and study previous price action. Even if this particular place is the same thing Nasdaq is doing, Nasdaq did the same thing here, and just go ahead and study this part Nasdaq price action. You can see it repeats these stuffs, right? And that's what you want to use for confluence. It repeats this stuff where price has a very large imbalance, then drops into, let's say, half of it, or the first imbalance, then treats higher, leaving a relative equal highs, then come back for the last imbalance, they're taking it out again. So it's kind of a routine for Nasdaq. I'm strongly in it. I strongly believe in Nasdaq taking out this low, right? Taking out this low before dropping into this imbalance. Now for the weekly AMD, price might take out this low as a manipulation phase, right? For Nasdaq, for those of you who are trading Nasdaq, price might take out this low for our manipulation phase, dropping into this order block and this fair value gap. And fair value gap are always a reaction point, right? Always a reaction point. You want to see price respecting consequent encroachment or something there. So price dropping into this as a manipulation phase can make price the rest of the week be a very bullish movement, right? That's the retracement you want to see, price going for liquidity before heading higher. Heading higher to where we have relative equal highs. You can see these things are not really that difficult. It's simple yet not easy. I keep telling guys, it's simple to see these things with hindsight, but yet it's not easy to spot them on live charts. That's why you need practice. That's why you need lot and lot of effort. You don't really just take my word for it because I say, okay, Nasdaq, I'm expecting Nasdaq to come to this particular zone. Then you go ahead and start selling to that particular zone. That's going to be very foolish of you, right? So you want to go ahead, do your own research, take out the things that I've said, take out the things I point out, and see if it meets your confidence of your own strategy, right? But if you're trading my strategy, fine, that's just it, okay? Just go and what I'm giving you as an assignment is today, immediately after this live session, go down to this particular. If you have bar replay, then that's fine. Go down to this particular price action, February. That's around February, from February first. Okay, go and study this price action, daily chart and weekly chart, and also study this price action from last year November 30th. You see what I'm telling you is exactly from last year November 30th. You see what I'm telling you is exactly the same thing happening all over again, right? Exactly the same. So that's your assignment for Nasdaq, and that's what I wanted to point out. Okay, so let's go to the early time frame and what we should be expecting. Oh god. Okay, so let me calibrate my chart there. Okay, that's the opening for Monday. And what are we expecting this Monday? Some people want to see sell, but before we sell, what is it you're expecting? And price myself, don't um argue that. If it sell, I'll be looking for counter trend. But this is what I'm expecting. You can see this um let's look at it. This is early time frame FVG, and price did not trade to the consequent encouragement. Yes, this might be a reversal point, but I'm not really satisfied with this, right? I'm not really satisfied with this. I want price to come take this high, dropping into 15-minute FVG there, dropping into 15-minute FVG. So you can see that this is a buy side liquidity to be taken out, and I want price to drop into this FVG. This is also a draw liquidity for Monday's price action. Then from there, I will be looking for sell. Why? Because some people might have this as their buy side liquidity and their either side buy side liquidity because it's relatively equal and all of that. Well, these highs for me are protected, very much protected. These highs for me are very much protected. So I'm not expecting price to take out this high until what, remember what I said on the previous class, until it takes out this sell side liquidity. I'm not expecting price to take out this high. It might happen against, it might go against these things I'm saying here. So you should understand that I'm not giving out financial advice. What I'm saying is exactly what I want to see and what exactly what I'm going to be doing for this week. So our price for Monday price action to trade above this high, this Friday high, dropping into this Thursday FVG, then trading down for uh sell side liquidity. Then if it sticks out this sell side liquidity, dropping into this fair value gap, all of these protected highs are invalidated. They are no more protected, they become unprotected. I'm going to teach about this, so you shouldn't worry too much about it. Well, so that was the remaining aspect. And for GBP USD, I saw some guys already selling. So let's look at the hourly time frame on GBP USD. Okay, so you can see what GBP USD is doing. Monday opened where this is Monday opened. You always want to do this. You always want to calibrate your chart, right? You always want to calibrate your chart. So you can see when price opens on Monday, there's one simple logic around it. Go, don't do it. Whatever I say, I don't like people taking my word for it, right? I don't like people taking my word for it for whatever I say. I have specific time frames that are like my own magic. Like I said earlier in some videos, I don't use the 4-hour time frame. I don't use the 4-hour time because it doesn't match with what I'm looking for. I don't use the 2 hours, the 3 hours, the 4 hours. You can see my time frames respectfully on Nasdaq, well arranged. The daily time frame, I can use daily time frame for some weekly weekly analysis too, right? So this is the daily, and this is the hourly time frame, and this is the 15-minute time frame. This is the 5 minutes time frame, and this is the 1 minute time frame, right? So you can see all of these time frames. I don't have 4-hour time frame in it. I don't have 4-hour time frame. These are the time frames I mainly use. So time frames are something very personal. You want to study price action, you want to understand very well what time frame respects your arrays, right? That's what you want to do. And there's something around Nasdaq for Monday. Don't take my word for it. I keep using this as a disclaimer. Go and study. Just write these things down as I'm telling you. Go and study them immediately after this video. Go to every Monday. Go to the Monday of every week from like past 5 months, right? On your, let's say, 15-minute time frame, not 1 hour. 15-minute time frame. Just calibrate your charts for the past 5 weeks. Monday price action. You see that Monday does just one simple logic. I don't know about GBP. I don't trade GBP USD. I'm talking about Nasdaq. So this is just going to be like a bonus tip, right? Monday has just one simple logic. Friday should leave what? Friday should leave a fair value gap for Monday to refill before heading for whatever it does. But if Friday does not leave a fair value gap, then Thursday have a fair value gap, then price goes for that. You have to correlate this with your bias, your overall bias, right? Let's say you have a bearish bias for that week, then Friday left an imbalance. Monday will just continue exactly where Friday stopped, trading into that imbalance, then going for your bearish moment. But if Friday did not leave any imbalance, just like what is happening here, and the respectful time frames I use for these things are just hourly time frame and 15-minute time frame. That's the time frame I mostly check for my imbalance. So there's something I'll teach about very soon. It's called the intraday AMD. This is very rare. I've not seen this anywhere, and it mainly works on Nasdaq because I've been trading Nasdaq for quite some time now, and it's going to be another bonus, like another gem. You will not see that anywhere. It's an intraday AMD. You know the weekly AMD, the daily AMD, but this one is quite different. The intraday AMD, and it's specialized with just specific time frames I'm not going to mention. So what I'm seeing for Nasdaq, I can see this Thursday high. Thursday left no imbalance also. So this becomes a drawn liquidity for Thursday, right? This becomes a drawn liquidity. Now price might take this out and keep going for that, but my bias for GBP USD is bearish. So I want to see price come take a liquidity before coming back. I see all of this CB, all of this CB, let me just call it after you know the meaning, right? All of this CB and price consolidating inside that FVG, respecting the consequent encroachment. If you don't think price respects consequent encroachment, let me mark it out. So this is a consequent encroachment. Okay, I want to make it, this is the 50%. So I want to make a horizontal line just perfectly in it. I want to make a horizontal line perfectly in it. Okay, right. So you can see the horizontal line perfectly in it. What do you see? You can see that these are exactly algorithm. This is not buying and selling pressure. No amount of buying and selling pressure can code these things like this. You can see price on the hourly time frame respecting the consequent encroachment. That's the CE. You see me annotate on my chart most times. You can see price is respecting the CE of this FVG on the hourly time frame. The body of the candle, you can see how it's perfectly respecting. That's the algorithm footprint you want to be looking for. And it does not stop there. This rejection also spike back, and this other rejection also, the body of the candle perfectly respecting the 50% of the FVG, and that's algorithm, right? This can be a signal that price wants to retreat, right? But for Monday, what are you expecting for Monday? You want Monday to take out this Thursday high before trading downwards, if you are expecting that, right? So this might go wrong because sometimes, like I said, no analysis is 100% perfect. This might go wrong, and in a situation where price go wrong, you look for other scenarios. But this is exactly what I'm looking for and expecting on GBP USD, right? But for Nasdaq, let's go to the early time frame on Nasdaq. Like I said, you see Friday left no FVG, right? Friday left no FVG, left this high, and Thursday leaves an FVG, and you see price just bullish. Where do you think price is bullish to? Some people think, oh, price is going to be bullish for the day and all of that, but let's save that for the day. Okay, if you think I'm just exaggerating, let's look at, let's say 3 weeks back, right? Let's look at 3 weeks back, right? Okay, so when I say Friday is the continuation of what, Monday is the continuation of what Friday did. Some people don't actually believe me. So you can see here, Friday dropped into this FVG, right? This is our MIMB. I think I remember talking about the MIMB on the daily AMD. That's the manipulation imbalance. These are MIMB. I'm going to talk about that. I'm going to explain that very soon. I'm going to make a video for that. And you can see hourly time frame perfectly. There's no imbalance here, right? But this is a low on the 15-minute time frame. Let's look at the 15-minute time frame so you don't get confused. So if money doesn't have FVG, it goes for the low. So this low, if you check on 1 minute time frame, 5 minute time frame, is a very very good low, very unprotected low. So price takes that low before rallying to what, to the manipulation phase. That, if that's not enough, let's look at the previous week also. Okay, so this is another week for Monday. This is how you backtest. Most people ask questions. How do I backtest? How do I study? This is how you backtest. You want to see, you're an intraday. You want to see what happened on Monday. You want to see what happened on Tuesday, right? These are the things you check for. Now let's look at Monday. Okay, you can see this perfect FAG. Friday, this is Friday price action, very choppy, left no imbalance, and this was during that Easter time. Please excuse me. Sorry for that. I seriously need to get my medication, and I'll do that just after this session. Okay, so you wanted more proofs. I'm just going to stop you on this week, so you can go back and backtest previous week and do the same thing. So these are you backtest. These are you study. You want to see what happened on Monday, like the beginning of the week, and this is what I told you guys on don't trade on a new day without checking for these things, right? I'm going to do a video on don't trade on a new week without checking for these things, right? So you want to check out for these things. You can see Friday FVG price perfectly respecting that, not going for the low, because the low is very much protected. uh, this protected low and high might start to piss you off because I use it every time. And you can see price on the 15 minute time frame perfectly respecting that FVG. I think I made this on daily MD video. Price is perfectly respecting that FVG. So you want to see price rally higher, and this is just for Monday price action. You can go ahead and look for, previous weeks Monday. It's either trading into Friday FVG, right, before making any other move. That's the continuation of what Friday did, the continuation of what last week does. It's not like it just new week entirely on the chart, right? So if it's not doing that, oh boy, sorry about that. So if it's not doing that, if Friday had no FVG, then it goes for Thursday. Sometimes Friday might just leave a low, very unprotected low, and prices just use that trading into Thursday FVG. But if Thursday have no FVG, Friday have no FVG, then it goes for the nearest unprotected low, be it on Thursday and Friday, and that's what just Monday does. So don't take my word for it. This is Nasdaq, not GBP USD. So I don't know how it will be on GBP USD. So you can see that I say this is protected. This is protected for more reasons until price takes out exercise liquidity, and I'm expecting price to take out this high. I see price is just shooting his head straight to it, and that's what I'm expecting for GPUs. So I'm giving you a homework, right? I'm giving you a homework, homies. Go back to your chart and study why okay, study. This is the narrative. This is narrative, not clear structure. I'm not trading structure. I'm trading narrative, clean algorithm footprint, right? So go ahead and study. Use for the past 2 months. I think your 1 hour time frame will do. Your 1 hour time frame will go for the 2 months, even if you are using the basic plan, or your 15-minute time frame will go for the 2 months. So even if you don't have bar replay, right, you can just keep scrolling back, then use the vertical line, this vertical line, to mark out your Monday and see what it does. It just goes perfectly respecting these things I say, right? And if it does that, you can comment below this video or in the Telegram community, right, where our free mentorship is done. Right, so that's going to be that for this particular live session. Let me go get some medication, and we'll be looking at this price action later in the day. I'm waiting. I don't know. I've not checked my forex calendar today. I don't know which news, high impact news we'll be having today, but this is just the narrative around what I'm expecting today to see today. Sometimes you have this bias and this clear point out of where price is supposed to react, but you don't know exactly when price will react to, and sometimes you might get taken out when trying to get into this trade. Sometimes poor execution is also the problem, right? So you need to study these things. It's constant study. Believe in the marathon, not in the sprints, right? These things will work for you. So thanks folks for joining in. Thanks folks for listening. And I think this will be the end of our live session. Until I make that video on, I think I'm going to make a video. Our next video should be on types of inefficiencies. I think that's that, and episode 19.